Hello, I'm Peter Towers, founder and managing director of ESS BIZTOOLS. Welcome to the Accountant's Minute podcast. Today we're going to discuss crowdsourced funding, equity raising. I'm going to guide you through the process. And hopefully you will decide that it's worth you knowing more about how crowdsourced funding operates. First of all, I want to destroy a myth. There is a myth in Australian accounting circles that only public companies, and indeed only unlisted public companies, can avail themselves of the opportunity of raising capital utilising crowdsourced funding, equity raising. That's not true. It started off that way and ran for about 8 months before the federal government bowed to pressure from the financial industry, which indicated that private companies, as well as unlisted public companies, should be able to raise capital from the public. And today, 7 years on, most of the applicants are private companies to raise capital as a crowdsourced funding equity raising company. When the legislation commenced, Australia was playing catch-up. The other major economic countries in the world, USA, Canada, United Kingdom, Germany, France, Singapore, already had crowdsourced funding, and also New Zealand. And in fact, New Zealand, I think, was one of the reasons why our political leaders in Canberra decided they had to do something about it, because some companies were actually going across the ditch to start their enterprises so that they could raise capital from New Zealand investors. So despite the COVID crisis and the very difficult economic circumstances that have prevailed for the last couple of years, crowdsourced funding is still performing in Australia. So let's have a look at it. The real advantage is that companies are able to raise money direct from the public without issuing a prospectus. And my purpose in having this discussion with you today is to highlight to you that accountants can really be heavily involved in assisting SMEs, whether unlisted public companies or private companies, to get themselves investment ready to be able to utilise the crowdsourced funding equity raising legislation. Under the legislation, the Australian Security Investment Commission can appoint any person or organisation that has a financial services industry licence as a crowdsourced funding intermediary. How many intermediaries have been appointed in total? No one seems to know. At one stage, there were 16. On my research, there's only about 5 who are active at present, and one of those businesses, Birchall from Melbourne, has about a 70% share of the market. I think there's some tremendous opportunities, and we're going to talk about that in a moment. The opportunities for accountants to really analyse the benefits for your accounting firm and for your accounting team, because this is interesting and challenging work. So the intermediaries have got a dual responsibility. They are the representative of ASIC and therefore have significant power in this overall concept of raising capital as crowdsourced funding equity raising, but they are also the broker for the company that has appointed them as their intermediary. They help raise the capital. So most of the intermediaries already have thousands of people around Australia and probably around the world who have indicated to them that they're interested in investing in companies who are trying to raise capital. So which type of companies are able? I've already told you it's private companies and it's unlisted public companies. Well, first of all, there is no restriction on the industries that the companies are involved in. It's any type of industry. There's no federal government restriction. Whether there's any other restrictions through industry associations is another matter, but I don't really know of any. The turnover is one of the big considerations. The applicant's turnover in the 12 months prior to the application must be less than 25 million Australian dollars calculated on a worldwide basis. And that's the company and its subsidiaries, less than $25 million. The value of assets that are owned by the company and its subsidiaries must be less than $25 million. Neither the company nor any subsidiary can be listed on a stock exchange anywhere in the world. And the company must have at least 2 directors, even though it might be an Australian private company, which, as you know, only needs to have 1 director. To go down the crowdsourced funding path, they need to have at least 2 directors. And in fact, my recommendation is they do have more than 2 directors in any case, but they only need to have 2. Now, the funds are to be used for business expansion. They're not to be invested in securities or managed schemes. The government wants to encourage investors to invest in these companies, and the investors do so on the belief that the money that they're contributing is going to be used to promote the cause of the business, whatever it happens to be, creating a new economic activity which may affect the activities that some of the investors are associated with in any case. So the numbers so far are worth looking at. Since 2018, $347 million has been raised by companies utilising crowdsourced funding equity raising. And the number of companies was 489. Now that works out at about 70 a year over the last 7 years. Maybe a few more, 75 a year. It's not a staggering figure when you look at, we're talking about the whole of Australia, is it? Now, the intermediaries I mentioned, there are 5. Virtual in Melbourne is the undoubted leader. They've been an intermediary right from day one. And then we have Venture Crowd and On Market and Venture Capital, all based in Sydney, and Swarmer in Adelaide. There may be some others because it's hard to get an overall list, but they're the ones that are prevalent in the marketplace at present. What the intermediary does is examines the crowdsourced funding offer document, which I'll come to shortly, but the company has to prepare, and they'll need your assistance to prepare it. I said earlier there's no prospectus, but there is a document that has to be prepared and submitted to the intermediary. The intermediary reviews it and decides whether the company is eligible to try to raise capital. So where do accountants fit in? Companies will not be successful unless they are properly fitted out. This is like getting a football team to win a very important grand final. You don't put the team on the park unless they've trained well, they're match fit, they've got their strips, their uniforms ready, their boots are clean, they're ready to go. It's the same thing with a company that's going to try to raise crowdsourced funding. In fact, one of the original intermediaries, a company called Equitise from Sydney, issued a report a couple of years ago which indicated that they only seriously looked at about 5% of the companies that made contact with them. In other words, they knocked back 95% of the companies. Why? I did interview a senior officer of Equitise a few years ago, and he indicated companies were being put forward by their directors that had no idea. They didn't have a written business plan. They didn't have budgets and cash flow forecasts. They didn't have a vision of what they were going to do with the money. And therefore, they were not interested in supporting them. And I think you'll find very similar information from Birchall. I think this is a national disgrace that only 5% of the people that applied were seriously considered because they didn't have a set of documents which illustrated who they were and what their vision was and what they were trying to achieve and what the return was going to be for investors. This is a great opportunity for you to work with your clients, those who are wanting to expand, those who are wanting to scale up. Every person I talk to, it mentions the word scale up. In the next word, they're really saying they're looking for money. There is an opportunity. 489 companies have raised capital in Australia, so they've shown that there's interest out there in the marketplace. And a survey last year indicated that about 72% of those investors were private individuals, small business people who invested. And the balance were sophisticated investors. And the reason for that is that the small investor has special protection under the legislation for crowdsourced funding equity raising. So what do people need? They need a structure that's set up. They need a business that's operating. They need proper financial and management systems in place. I'm going to talk to you more about that shortly. We recommend the 52-week business enhancement system. Daily, weekly, monthly processes need to be put in place. They need business plans and then predictive accounting reports that are based on the business plan. So that's the budgets, the cash flow forecasts, the projected balance sheets. Because the investors want to know what's going to happen with this company. So the company can raise up to $5 million in a 12-month period. And they can go back to the market the following year as long as they get approval from an intermediary. It doesn't have to be the same intermediary. They can go to another one. They need to be able to assist in the establishment of systems in the company so that there can be regular board of directors meetings held every month and that they get information. But that's going down the track a bit, but some of this needs to be prepared before, like their current financial position. They need their vision, need the business plan, they need the budgets and cash flow forecasts. Because then there's a document to be prepared called the crowdsourced funding offer document. Now, this is the document that has to be submitted to an intermediary. Now, who selects the intermediaries? Your client selects the intermediary they'd like to work with. So they can make contact with each of the intermediaries and anyone else that's promoting themselves as having one of those intermediary licenses. Because as I said before, it's a bit difficult to find out who they are, but they do promote themselves from time to time. When they sit down and have that discussion, they need to be able to create an impression in the minds of the person from the intermediary that they have a vision for their business. They know where they want to go. They know what they're going to do with the $1 million, $2 million, $3 million, or indeed $5 million that they're wanting to raise. They've thought that through. And they can talk to all of the intermediaries if they wish, because this is an important decision that your clients' directors need to make. Who are they going to sign on with, in effect? Because this is their football coach who's going to help them win the grand final. And the grand final, of course, is raising the cash. They have to work very closely with the intermediaries. It's a good idea to suggest that your clients, and you, if you're going to be advising them, go onto the internet and have a look at the websites that the intermediaries are running. When this legislation was first introduced, and I read it probably back in about 2017, I thought it was very dry. I thought to myself, I don't know if this is going to work, because there seemed to be a lot of restrictions on who could do what. There was a lot of very strange titles given to certain things. But thanks to Birchall and Equitise and a couple of the other original intermediaries, they negotiated with ASIC. They got things understood. So if you look at their websites today, they're interesting. They've got videos for the companies. They've got presentations from the companies that are trying to raise capital, and they are in there helping them. They would probably encourage your client to make sure they have a website established before they go down this path of trying to raise capital, so that people who know something about them, live in their locality, work in their locality, are their customers, their suppliers, their family members, are employees, can all go on and have a look at what this company's all about. They can't be promoting at that stage they're wanting to raise capital. That would be illegal. But intermediaries are looking for the applicants to have some presence in their marketplace, as well as their budgets and their cash flow forecasts and their vision as to where they're going. So after the discussions, and they've decided which of the intermediaries they're going to select to be their intermediary, they can then say, who are we going to appoint? So they decide who to appoint. Then there's an agreement to be signed. And in that agreement, there will be a fee payable to the intermediary. Now, the intermediaries are able to make an upfront charge for preparation of the videos and a few other things, normally of $2,000 to $3,000. But after that, they'll be nominating a percentage of the capital that is raised, which is normally around 7 to 8%. Now, the way that works is in the offer document, the company, in conjunction with the intermediary, is going to nominate an amount they're trying to raise, say $1 million. Now, if that's the amount that's set as being the minimum amount of capital to be raised, that money all flows to the intermediary who receives that money. But if the sum of $1 million that was identified is not raised, all of that money has to be refunded back to the contributors, and the intermediary does not receive any payment. So the government set this up as a win-win for the company and the intermediary, as long as both sides work very hard, because the intermediary's got to help promote and market the company so that the money's been invested flows in. And obviously the company directors have got a role, because under the legislation they have to be available every day so that answers to any questions can be submitted. Because this legislation is different from a lot of any other legislation in Australia. When you're going to the stock exchange to buy a share, you have to buy it. You don't get the opportunity to ask the directors questions. But under this legislation, you do. So if you can read the material that will be displayed on the website of the intermediary, your budgets, your cash flows, your visions, your team, it's all there. And if a potential investor wants to know more, they can type in a question. That goes to the intermediary. The intermediary will immediately send the questions to the company directors and really wants replies promptly. Why? Because a lot of other people can see that that question's been raised when they go to the intermediary's website and look at your client's company's profile. And they, in all probability, might say, well, that's an interesting question. I was thinking of something along those lines myself. I will see what the answer is before I make my decision as to whether to invest. So they can sit back and wait. So the intermediary will be looking for very quick response to the question. So the market keeps on going. So this is an interesting way to raise capital. Now, the company can go back and raise more money in later that year, even if they wish, as long as they go through the process again, appointing an intermediary who could be the same intermediary or a new intermediary. Or they could, the following year, go back into the market to raise more money, and it could be up to $5 million. So this is true advisory work, I think, helping SMEs to raise capital, because you will be involved in helping them to strengthen their corporate governance. I think there's huge untapped potential for accountants. I'm amazed that the major accounting bodies, having been promoting crowdsourced funding equity raising for the last 7 years, we have continually been pushing the concept. And some of our subscribers have done a reasonable amount of work. So let's look at what's happening. Over the period, 7 years, approximately 70 companies per annum have raised the capital. If we use the equitise guidelines, which a former director of BIZTOOLS told me that their experience was very similar, so probably only actually looking at around 5%. And I've seen figures that reduce that figure back to 3% of applicants. If the quality of applicants can be improved because people already understand the process. And if you're sitting back saying, well, Peter, how am I going to do all this? If you become a member of ESS BIZTOOLS, that's all in our system. We've got packages covering everything that I've talked about so far and a lot more. So we believe there's a lot more opportunities for people to invest. I've done my calculations and I believe that the market could be significantly higher. Originally, the government through ASIC thought that they needed 16 intermediaries to service the market. And people I talked to at that stage in the industry, other people who had licenses, were quite happy with that if they could get the deal flow. And I think accountants are vital for that deal flow. Think about everything I talked about before. Who's going to help your SME clients who are small companies at this stage? Their turnovers are under 25 million. Now, if they're up just under the 25 million, they may be a wee bit more sophisticated through some external directors or whatever. But most of them just do not have internal resources to give them the information they need. But 16 of those could be very busy. On my calculations, that if we looked at 16 companies and said that they were all going to achieve around what BIZTOOLS been achieving, 49 companies per annum, the market could be around 714 extra companies a year. 714 extra. Could even be higher, but 714 is a significant number. And it's more in line with what the government of the day, under Malcolm Turnbull, who was the Prime Minister that introduced this legislation, and he understood the difficulties that small companies had in raising capital. That's why he was so keen for this legislation to be introduced. But 714 additional companies. Now, that's not all. If we get 714 that can actually get a Guernsey in the team to play in the grand final, there'll be a number of others, maybe another 1,000 that start on the journey and for various reasons don't make the grade, don't get the information prepared, decide that it's a bit too tough for them, give up. I'm looking at the 714. Then I've turned around and looked at what sort of fees could be generated in that first 6 months of when this activity is undertaken. And my calculation is that on the companies that contribute to the overall process and actually raise capital, the total fee could be around $53,000 in that initial 12 months. And I've summarised that by the advice you would give them on how crowdsourced funding operates. On my experience, and I've done it on a number of occasions, of course, 3 hours work, $900 in fees. 52-week business enhancement system. That's making sure your client's got an appropriate system set up so that financial data is going to be available. And we've got to get them back into this concept that it's daily rhythm of meetings occurring, a weekly performance report so that the performance is analysed, compared to budgets. And if there's a problem, it's fixed straight away. and then monthly financial accounts, which are compared back to the budgets. So the establishment of that system, I think that would cost about $1,600. Rhythm of meetings, setting them up, the management team to meet very quickly daily, 4 or 5 minutes. What's the problems we're going to fix today? And making sure there's a report that gets sent round to the leadership team. I'm not saying you'd be preparing that. You would design it, make sure you got a copy of it, but have someone within the client's firm actually prepare that. The business plan's a vital document because that's conveying, first of all, to the directors and the leadership team what the vision is, what they've agreed to. But investors want it. Most importantly, the crowdsourced funding intermediary will read that page after page to decide whether your client's got that vision. And my estimate of what a well-constructed business plan is $23,000. We need budgets and cash flow forecasts, projected balance sheets, $10,000. We need introduction meetings with the intermediaries. They'll be looking to you to make those contacts. And in our system, we give you the contact information of each of those 5 intermediaries that I know are still operational, $3,000. The crowdsourced funding offer document. That's a document that you have to comply with the legislation, a cost of $8,000 to $10,000. And then we have the overall bringing all this together. There'll be a few other contingencies. $53,000. Now, what's that mean to the Australian accounting industry? Because I can't see too many other people going through that process. Sure, some other consultants might be able to handle some of that. But in the main, it is accountancy firms. That's who I'm talking to. Accountancy firms that can deliver that. Let's multiply it by 714. It comes in at $38 million. That's a staggering figure, I think. And there'll be more than just the 38 million because there will be at least another 1,000, maybe more, who set up on the journey and maybe have paid at least the first $900, having a brief on crowdsourced funding and then decided they didn't like the idea. So there are some tremendous opportunities. And there's another very significant group of people that you need to think about in all this, and that's your team, your talent. Every accountant that I talk to around Australia, numerous articles in Accountants Daily each week are talking about the problems of talent attraction and retention for the Australian accounting industry. One way, I think, which will significantly assist, is making sure that you have a deal flow of work in your firm that is interesting, is challenging. Because let's face it, sitting there all day, every day, throughout the year involved in tax return type work does become a wee bit boring. Having this type of work flowing through your organisation is showing your team the commercial side of activities. At ESS BIZTOOLS, our statement is we are there to assist accountants to deliver financial, commercial, management accounting advisory services. And I really believe that that is the type of services that you can assist in to deliver to those of your clients who are interested in this process. We have the material that you would obtain as a subscriber to communicate with your clients about this. We've pre-prepared the wording for you to present webinars to your clients. Make them alert that this way of raising capital does exist. They don't have to go and mortgage their house for the 3rd time to borrow the money to keep their business going. They don't have to go and try and mortgage their mother-in-law's apartment. Or they just give up because they know they can't raise the money. They can attract investors. And isn't this how the free enterprise type system was established over the last 500 or 600 years around the world? Investors put money into companies. Someone had a bright idea. They don't own the whole lot. Look at some of the major companies around the world. Look at the Murdoch business that started in Australia, started with a small newspaper in Adelaide. But the Murdoch family don't own 100%. They have attracted other investors into the company. It's how everything starts. BHP started in Broken Hill as 4 or 5 miners coming together. The same thing can happen in smaller enterprises. There's no stock exchange involved in crowdsourced funding equity raising. So once you've established, you can proceed the way the company's board of directors decides. If you'd like to talk to me about crowdsourced funding equity raising, please contact me. Or you can go to our ESS BIZTOOLS website, and you will find that you can subscribe just for the product package for crowdsourced funding equity raising, if that's all you want to do at this stage. If you want to subscribe for our financial forecasting package, you will find that the crowdsourced funding equity raising package is available as part of that overall package of services. I'd like to hear from you if you are now sitting back and saying, gee, we might be able to do this. We might have 3 or 4 clients that we could start talking about this range of services. Because at the end of the journey, of course, when you've helped your client go through this process and raise their $1 million or $5 million, not many of those companies are going to want to employ a full-time chief financial officer or even a full-time accountant. Most of them won't have enough work to keep a qualified, competent person fully engaged. So the ideal opportunity there is for you to be offering the virtual CFO services. That is the headline act within ESS BIZTOOLS. So you're then able to guide them in their business processes. I think there's tremendous amounts of opportunities in crowdsourced funding equity raising. I think COVID interfered with the momentum that was building up in 2019 and flowing just into 2020. But then we got hit with COVID and things all changed. And we're now coming back, picking up the pieces and saying there are tremendous opportunities for SMEs and for accountancy firms. And incidentally, there's another role your firm might be able to play also. If you undertake audits, not of the clients that you've helped raise capital for, I wouldn't have thought, but every company that raises more than $3 million has to appoint an auditor. Personally, I recommend every company that I'm dealing with in this area that they appoint an auditor. I think it's part of credibility with investors, but the legislation says you only have to appoint an auditor once $3 million has been raised. But that also opens up opportunities for accounting firms who have a functioning audit department. Please think about it. Please analyse where your firm's going and what some of your clients might like to do. If they could raise $1,000 and issue shares that might account for 20-25% of their company, is that going to set them up? Is that going to make their lives a little bit easier and allow them to build real wealth in their businesses? That's an important subject, and I hope you sit down and think about it. Stay safe, have a great day, and I'll talk to you again next week when we have Accountants Minute podcast. Thank you.